Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Thursday, the 24th day of July, 2014, and this is the daily report for gold and silver. We do have the precious metals markets under fairly strong, dramatic pressure, downside pressure today. As we look at gold, currently it has broken severely below 1,300, trading off about $11 on the day, off of the lows, but not by much at 1292.72, the low 1286.60, the high 1301.90. Silver also trading lower, and in terms of percentage drawdowns, as typical, the greatest percentage drawdown is in silver, currently trading off about 2.5% on the day, 2036, that's our current print, puts it off roughly 55 cents with a low of 20.23 and a high of 21 even. More on silver towards the end of the show. Traders, I want to start today's show by looking at this 360-minute chart, standard candlestick format. If you recall from earlier this week, I did something that I've only done maybe a handful of times, and that is actually recommend that you take a stop to the market. We did enter a trade roughly at 1316. That was, as you can see, this market is moving up. That was right here. I stood the test of time as we saw it top out right here at 23 and come back down, because we had this green candle right in here. Let me get my pointer up. And we saw the market begin to move back up a little bit. However, as it stalled at this 1318, 1317, my sense was that we were still in a corrective phase. I'll go through the count in a little bit. And my recommendation, the market was trading roughly at 1310, 1311 in that area. I sent out a special trade alert suggesting an alternative strategy, and that strategy was to simply limit our losses, take our stop to the market, and exit the trade. The reason was this failure right in here, because in terms of the way I was looking at the market, there was no doubt that we were in some sort of an A, B, C type corrective period. Clearly identified our A. Our B, though, as it came down a little bit with this green candle right here, my sense was there was the possibility to see this B be something like a 3 count, 1, 2, and then 3 back up. And I was looking for, as you recall, an upper limit of around 1330 if that was to be the case. However, when the market came up and then stalled really right at this area, right at this the 1318 or this 50% retracement, you can see that right here. My sense was we were going to see lower pricing, and my sense was that we had completed this B wave up and we're probably in our final C wave, which made it look something like an A, our B, and we are now currently in our C wave. Now, where will this C wave go is obviously the question on everybody's mind. And as you can see, we've got a couple of different fib retracements, but the important fib retracement that we're looking at right now has got to be the retracement of this longer rally, because we are now in a corrective stage. So we've got wave 1 up, we've got a wave 2 down, then we'll go into a wave 3 up. If that is the case, 61% is certainly not out of the realm, and then 50%, those are the two areas that we're looking at. As you can see by the close of the market right now, we're looking at a market which is trading below 1293.51, currently trading at 1292.94. If we can see the market kind of pop back up and find support here, that tells us one thing. If it cannot and we see it drifting lower, my sense is that we'll probably see this market trade as low as about 1280, and this of course is on a technical basis. We also have this top right here in place, which is roughly in that same area. Now, when we look at the weekly chart, you can see that I have adjusted a couple of the fib retracements. In specifics, this particular rally up, and when we look at this rally up, of course, this was the bottom itself. The other ones that we have charted, of course, are this particular corrective period down and this rally up. When we look at this bigger picture, the 50% comes in at 1286. When we compare it to the 61% or 1281, and that of course is of the shorter rally, this rally right in here, then this particular mark becomes evident as an area of concern, not so much concern, but potential to see the market drop to, call it 1180 to 1185. In terms of a bigger picture, a 61% retracement, which I don't think we're going to see, would take us to about 1261. But here's the other thing that we are seeing in terms of bearish sentiment in the market. Just as we identified this three-river morning signaling a bottom and a potential top, we also identified really an incomplete piercing line, but we did get confirmation on this way up. When we take a look at the straight candlestick patterns on the weekly chart, and we'll look at the daily in a second, but on a weekly chart we get an engulfing bearish, and this absolutely gives us confirmation of that. Now, last time we saw an engulfing bearish really was right in here, and this was the top of the market at what, just below $1,400 per ounce. So these candlestick patterns do give us some genuine insight into the market and into where we think the market could move. Right now, I am looking at some continued downside pressure in the market. That could end at any moment, of course, because this market seems to be very, very rumor-based, very slow to come up, very quick to come down. But in terms of straight technicals, 1281 to 1285 are areas that we need to look at. So we talked about the bigger picture by looking at the weekly charts. On the daily charts, really what we're looking at is something like this. I'm looking at this as our wave one. Our wave one. Now on our wave two down, we're looking for some sort of an ABC. I believe we saw our A. Our counter wave, that took us exactly to a 50% retracement of this move down. And now I believe we're in our final C waves. 50% right in here, that's of course of the bigger picture. For us to get a real idea of where we think this market could go, we need to plot one simple fib retracement of this rally here. Let's go ahead and put that in. So traders, I've just gone ahead and have placed in our fib retracement into this daily chart so we can take a look at what we've been talking about. If we take a look at this most recent $100 rally up, 50% retracement of this rally takes us roughly to 1293, and that's this gray line here. This 50%, of course, is that bigger, large rally that we talked about. Interestingly enough, though, when we take a look at this low on our daily chart, it is precisely 1286. It then comes up and is currently, as I said, just at around 1293.60. That's our current print. Let's go ahead and darken that 50% in. There you go. And then when we see that, what we are seeing is it being supportive right in here as the market came down. This is that low that it hit. It comes back up at 50%, moves back down. And as I said, currently at 1294 now. So we are getting, whether it's a little bit of short covering or buying the dip, so to speak, it is critically important to see if it finds support at 1293. Because as I said, if it cannot find support at 1293, we're going to have to look at the 61% retracement, and that is 1280. I think at that point, we should have washed all the shorts out of the market, and I think we will look to conclude this corrective A, B, C pattern, and then move into a wave 3 impulse scenario. So as I said at the beginning of the show, in terms of percentage drawdowns today, silver is absolutely leading the board in the precious metals markets. We're looking at a daily chart. This daily chart, of course, is of the spot market. It is standard candlestick format. You can see that we are well off of these lows taking us below $20 per ounce according to Signal data, which is the data eSignal, the data that we use here. But what I am looking at is the fact that we are trading below this 38%, 2045. To me, that is a critical number, and that is our current resistance area. Support in the market has got to be just at around 2011 being a 50% retracement. Traders, hopefully you took the alternative strategy and exited the trade at the beginning of the week. If you did, we took a small calculated loss. If you did not, you were stopped out today in gold. We had it just below 1,300, so you would have lost a couple more dollars. In either case, we are all flat in the market right now. We are going to be awaiting some sort of confirmation that we've gotten some sort of bottom and a resumption to the impulse phase that we were in. In the same way, when we look at silver, you can see this being our wave one. It's certainly not as clear, but we had some sort of an A, a B, and we are in our final C on silver also. So I would look for, upon the conclusion of this C wave, for this market to begin to trend higher. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.